Today is Tuesday, March 29th. I want to take a look at oil and the stock market again. I think oil and stocks, we already discussed this, they've been correlated pretty well. And let's start off by looking at the USO in the bar chart. In the purple line, that's the SPY, S&P 500 ETF, and you can see that going back to December, it's just a beautiful correlation. It's still pretty tight. I don't go with the absolute trend here, go with the relative trend. They're both rising in here, a little pullback and a peak around last week. So they're both falling now, and that could be bad news for stocks, because if oil is falling, stocks may follow. So let's delete this and take a look at some individual items. Come back out a little bit, and I'm going to add a watch list that I created earlier. This is just going to make it easier for me to type stuff in or to change symbols. I'm going to start with the XLE ETF. I've got a trend line in here from early September. 200-day average here in teal, and you can see that the current rebound ended right about there, so it's a good resistance area. RSI down here in the middle. Just going to fix that trend line a little bit, and you can see the trend in RSI is broken. I have found that you can put trend lines on studies, and when they do break, you get a little advance warning for a trend break in the price. So if that's the case, then XLE is on notice for a breakdown. It's not a confirmed breakdown, but it's on notice. Alright, and price relative is down in the bottom, or relative performance, relative strength. It's really just XLE divided by SPY. You can see this has also been trending higher and in danger of breaking down. Maybe we can zoom in there a little bit and see that it's just barely starting to break down here. Alright, moving back out. Take a look a little bit more. This is the XOI index. This used to be the gold standard for the oil sector before ETFs were around. It's just got a slightly different composition, but the story is the same. Stopped at the trend line, stopped at the 200-day average. Looks like RSI is breaking down. Price relative, same story. So just confirming with similar but not identical indices. Here's the OIH, the Oil Services ETF. The trend line here is a little bit different, just because it's a prettier trend line, but it's the same story. Stopped at the 200-day average, stopped at the trend line. We can bring this up here to where the others started. And, it's not a great trend line, but it's the same story. So we have a break in RSI, break in momentum. Price relative also looks like it really didn't get cooking there. It's still in the downtrend overall from late last year. And finally, take a look at the specialty subindex, the oil exploration and production group. Same story, just a different angle on the sector. So nothing really different here. All right, let's take the watch list out of the way. Click over here. And go back to USO, and now get rid of RSI and leave price relative up there, and let's really get close to what's going on short term. Put in a trend line, set about that width, thickness so you could see it, and we'll draw it in the classic way from the ultimate low here to the first reaction low. And it looks like price has not officially broken down yet for USO, but it certainly hasn't been strong. And with the indicators, this is RSI that we looked before, breaking down, just not a good sign. I would say that if this breaks, stocks are going to have a rough road here. They've been down for a couple days after a nice run. It's probably time to pull back a little bit without even arguing that the rally is over and the bull market is not going to start. I personally don't think it will, but right now we're looking at short term. If we're following oil, oil's leading stocks, oil looks weak, and we'll just take it from there.